Since the presidential election result, the dollar has had a complete turnaround against a basket of currencies. In the immediate aftermath, the dollar was lower against the euro, the yen and sterling, but higher on the commodity currencies like the Aussie and the Canadian, also the New Zealand dollar. But today, 24 to 30 hours into the new period, it's a very different story. Stephen Woodcock joins us now from Plutus FX, where he's a FX trader. Where are we with what's going on? In past interviews, we've spoken about this. You've illustrated your dollar bull stance against many currencies. How do you sit with today's move, or last 24 hours move?
Well, I'm not surprised we've had the reaction we've had, but generally I'm looking at it thinking this is just adding fuel to the dollar fire for me. I think there's only one way for the dollar at the moment, especially with you know, the Trump idea of where we're going as far as, you know, tax cuts and more spending, especially infrastructure, stuff like that. So I can only see one way for the dollar at the moment. Now, I'm not,
and that's a stronger dollar.
A stronger dollar, yes. It can only be one way from here. And but what I will say is I'm quite surprised the move, the initial move, the immediate turnaround to the extent we are at the moment in indices and currencies, and we're not out of that period yet. I think there's two-way business to be done at the moment.
Okay, just before we go on to currencies, just want to pick up on the index point you just mentioned there. You don't like being as high as we are. How does this fit with a currency trader's view on the markets?
Well, you mean the indices?
Yeah, the indices. Yeah.
Well, for me, the indices. I actually prior to the vote, I actually thought we're at very high levels at the moment. For the past 3 or 4 months, everyone has been telling me there's only one place to put your money at the moment, and that was indices, because they were going higher. But they actually weren't. Yeah, they haven't gone up for 3 months. And that tells me, well, if everyone's still buying it, ain't going up, there's only one way for that to go. And we saw, you know, as you say, the initial move after the vote was an 800-point sell-off overnight that has obviously been reversed now from the lows. We're 1,300 points higher.
Yeah, that's on the Dow.
On the Dow, of course. Yeah, of course.
So you're happier now. What you would be happier if these indices were lower? Yeah,
I mean, for me, I think everyone's getting carried away purely on the back of a speech. And you know, we've got to start looking at his policies and what he's going to be coming. And for me, for the Dow and indices to bounce the way they have, I mean, what are we? 36 hours? Is that what it is at the moment? 30 hours? I think that's a massive move, and I see room for big corrections still. And initially I would say we're going to undo some of the move we've seen over the last 24.
Okay, that's the indices. Let's take a look back at these currencies. In the past, you've been here. You talked about the fact that you feel as though sterling wants to move higher, but you've got this dollar, this dollar bull situation. Let's go first of all against a daily chart for sterling against the US dollar. We've seen this little bit of a rally. In fact, the low point, the flash crash that we had on the 7th of October, where we got as low as what was it, 118.20.
Well, sorry, I think Reuters were calling it 114.90. I think, if I remember
right. Yeah, so lower than where we had it here, but we've seen a little bit of a rally going on recently. Higher for sterling, is that still your call?
Well, what I'd say is sterling has at least stopped the rot. We've come out of that. It was a sell. You know, it tried to rally sometimes, but just had nothing in it. Even when it was sitting above 133, it really tried to rally and it couldn't do it. Then once we broke through 130, like you say, we started dropping lower, and then we had the flash crash, which, you know, has obviously cleared out a lot of people, but it did show the direction and where the weakness is. But since then, what we have seen, we've managed to hold on to 122.50 and currently 123.65, which are good levels for sterling at the moment. So at least we have some support underneath it now, whereas before it was, where does it drop to? Okay, so just purely on the fact that we are managing to sit above certain numbers, we have got support now, and it gives it something to work off. I do think sterling trades up towards 127.5, 128, but we're trading the dollar at the moment. So sterling really at the moment is a bit of a sideline whilst we're looking at the dollar, and that's what we're doing.
Okay, so which is the keen crosses you're looking at for dollar?
Well, basically dollar yen. You know, I'll be quite honest with you. Dollar yen came down a bit lower than I expected it to. I did think from when we were up at 125, I did expect to pull back, but I thought we'd come down to maybe 110. We obviously went down to just below 100, which for me a little bit too far. But the Bank of Japan's inaction have really let the yen sort of strengthen, and now we have seen the dollar, if you like, or Trump take over, if you like. We should see dollar movement. I'm looking for dollar yen. I mean, my long-term objective in dollar yen is up towards 150. But we've got to, see what's happening over the. I mean, everyone keeps talking about the next 100 days, but generally the dollar should firm up as just on its own merit now.
Yeah, that would be massively bullish, of course, for the Japanese equity markets.
Of course,
a weaker Japanese yen. What about the euro dollar? Because this is something that a lot of people have been watching for as well. The euro's got all sorts of problems itself. One assumes the euro is going to go lower anyway.
Well, everyone assumes. I mean, I'm looking for it back to the previous lows and lower. But I mean, I think what we do have some central bank action in there. 108.5 at the moment seems to be holding it up very well. The way that the price action looks, it wants to go and have another look at that now, and we may take it out. But it's been a range trade. Euro dollar really has been, over the course of the year, has probably had the least range across many crosses. And if you've been trading euro dollar, it's been actually quite dull. And if you look at the chart for the year, it's a sideways chart. We've really gone, very well. We haven't gone very far at all. Yeah. And we're now toppy above 113.20, and we're a bit light at 108.60. So that was the range, and we've been playing within that for quite some time now.
But do you see this 108.50 taken out?
Yeah, I do see 108.50 taken out. We did have a spell where the Bank of Japan were buying lots of euro. Sorry, not the Bank of Japan, Bank of China were buying lots of euros, but I'm not sure if they are now. And like I say, I think the election we've just had in the States is going to make people maybe realign their currency expectations and what other central banks are going to be doing now. Yeah. And I think what happened, with the euro is it's been out of the news for a little while. So we're dollar focused. We still are dollar focused for the time being, and let's see what comes out of the States.
Okay, going back to the euro side of things, how about euro sterling?
Well, euro sterling I think is a tad heavy. It doesn't really like it much above 90. And we've seen a sell-off since. The chart that we've got there, I like that spike up in, what's that, how long ago was that? About
that was a flash crash
day,
the 7th of October.
Yeah, so we're 5 or 6 weeks through there, but that just indicates to me a little bit of a top there and a bit of exhaustion up that way. And I like the way that chart is forming. I'd like to see it pull back. I think for me, I'd like to see euro sterling back towards 84, maybe something like that, and go from there. But it is, like I say, it's dollar-based at the moment. Everything we're doing is going to be dollar-based. Even though we're talking euro sterling, we're concentrating on the other crosses with the dollar, and this is going to be a byproduct of what goes on elsewhere. So I think for the moment, you're trading euro sterling, it might be a tad uninteresting. Yeah. But it's definitely, like I say, dollar yen, cable maybe, but yeah, euro sterling for me won't be that important over the next 3 months.
Yeah. How about some of the commodity currencies? I was saying earlier on, interesting moves in Aussie dollar. In fact, this morning we've been talking about this a lot because of this breakout and this triangle formation here that it's come out at. It didn't hold on to that yesterday because of the moves, but it's had another go at it today. This is the Australian dollar moving up today against the US dollar.
Yeah, well, I think sterling Aussie as well. I mean, it was only 6-7 months ago we were trading sterling Aussie at 225. Right. We're currently down at something like 158, and the Aussie has been having a torrid time. Up until probably 4 or 5 months ago, it's found some support. We're not over that previous high yet. I'd like to see it take that previous high out, and then we can extend the gains. But same again, if we're talking of a strong dollar, it's obviously going to hamper the Aussie rallying. So it may be one of those where we see the Aussie maybe sit around these levels for a while, because like I say, I am Aussie friendly at the moment. It won't take much to change that view, though, because as you say, there's an ascending triangle there that the bottom end of it isn't that far away either. So if we come down and start taking that out, then all that bet is off, and probably we resume the weak Aussie scenario on that chart.
Yeah. Staying with the commodity currencies. We were talking before we went live about the Canadian as well.
Yeah, obviously the Canadian dollar's been massively, you know, tied to oil over the last 6-7 months. Well, longer than it's always tied to oil, but it's been mirroring it for the last 6 or 7 months. And I have to admit, I'm bearish for oil, so I obviously think there's more Canadian weakness coming, and I do think we slightly broke up through 134 towards 135. We've pulled back at the moment. I know we're in the 133s now, but for longer term, I do see this. I think we're going to trade towards $138 Canadian, back towards 140, and probably the big number for dollar CAD is 155. Whether we see those numbers, if that is a situation, it won't be based purely on weak oil. There'll be other factors influencing it as well.
Yeah. One big event that's coming up for the dollar is, of course, the Fed meeting in December. Some suggestions, a little bit of weight has been taken off the argument for an interest rate rise this time around. How do you sit with that in terms of the currency markets?
I'm sure they'll just sit on it for the moment, and but I do think
no change.
I don't think they'll change yet, but it's coming.
Because of the change in administration.
Yeah, because of the
US
change.
Economy
Exactly. Yeah, because I mean, if they're going to be looking at spending more, they're going to have to start raising rates because they are going to start getting a little bit of inflation into the system, and so that's where we're going, but. I'm not sure if that's too early. I do think December may be just let's go into Christmas, fine, and then look at it in the new year when obviously he doesn't take his place until January, and that's when we start to move, I think. Yeah. And I think what it is, I think this is the event we've just seen has probably just ignited the higher rate situation.
Yeah. Do you see Janet Yellen staying?
Yeah, I do for the moment. I know there's a lot of talk that they obviously don't get on, and no respect with each other and things like that. But for the moment, when I watch Janet Yellen, I just think she's very dull, and that's what she should be.
Right, of course,
and she seems to do her job, and I think she's been okay. If you like, it's pretty much in the vein of Mark Carney, where it doesn't look like he's done anything. No. And I think when you get central bank governors, that most of them come across, if they've done their job properly, that's actually what it looks like. So yeah, but interest rate rises soon.
Yeah. Okay. All right. Thanks very much indeed, Stephen. Stephen Woodcock there from Plutus FX with an update on the dollar in the 36 hours since the turnaround began for the dollar crosses.